Hello and welcome. Today is the 9th of February. It's a Sunday. So tomorrow we will start a new week ahead, expecting consumer price index, producer price index, namely CPI, PPI, and American retail sales. These are the expectation numbers from the US. Nowadays, there are other things becoming more important than just the inflation, which is moving the markets. First of all, Mr. Trump is the main mover because every week he comes out with a new, let's say, throws out a new idea, and that causes a lot of havoc worldwide, even among U.S. Allies. So it's becoming very problematic worldwide. But he is doing this on purpose, of course, because if you want to make a deal with Mexico, you don't want to just give out a loud shout to everyone and saying, I'm going to ban to you, and I'm going to put a lot of taxes and duty taxes and tariffs on your product, similar to Canada, to other countries, because these are used by as a bargaining chip. Because otherwise, he could have just given a call and say, if you don't do this, I'm going to start. And this is more effective than saying this publicly. But politicians always use this opportunity to make things like they made a big win to the people who voted for them. So both Canada and Mexico problems according to Donald Trump could have been resolved by initial phone calls instead of announcing worldwide problematic, because there are things that they want to distract the attention of the people. So I like to talk about gold in two phases right now. One is, as you know, the London LMBA, London-based metal exchange. They are moving a huge amounts of gold. In fact, there is 2 weeks delay. It's officially bankrupt, if you think of it. If you cannot supply the service within a given time, imagine going to a bank and not they're telling you you can get your money in 2 months. So it's similar issue. But okay, they are just holding other people's gold. It's not London Gold's gold. So basically, United States is getting back its own deposited gold in London or other people's gold by paying a premium for interest rate. So right now, because of the lack of this problem, interest rates increase to 10%. Even it's a short term, very high interest rate, because they cannot give their own gold. They are giving other people's gold and they are lending gold. So what is the rush? It's shown to the people as this is due to the duty claims, tariff claims, at any tariff imposed to these countries who own this gold, which are namely like silver, is China, Russia, and all these other countries. They also own gold. Okay, Russia I don't think has too much gold in London left, but any country, and European countries, they are getting problems with European countries as well. So they are saying this is a repatriation or moving it to US, or there is something very big planned behind this. So people are curious, but it's a known fact that in the US, the gold being repatriated to US, there is almost no increase from the consumers. They are not asking for gold. And this is wise in terms of it to making a gain or not, because it's very simple. Today, the gold ounce price, not the record price that it may hit last week, $20 above this rate, was 2,861 US dollars. And if you are expecting 3,000 to hit to $3,000, it's a waste of time. If that's the only thing you are expecting. Why? because the difference between this number tomorrow and the end of the year $3,000 is only 339 US dollars. And this translates to 4.8% increase in gold prices, only 4 point in 1 year. And this is not guaranteed. It may even fall, it may go up, but there is a guaranteed US 10-year bond, 5-year bond. Why buy gold if you're just looking for 4 or 5%? Sell your gold, buy a US government bond. So the idea, if you're just keeping gold to make money, it's not wise. It's dumb to keep money when somebody guarantees you. But then why are we still buying gold instead of government bonds? Now that's a different situation. You should not count how much percent you're making. You should count on how much you may lose on these items if there's a sudden unexpected movement. Because there was an article from that was mentioned yesterday from Ernest Hemingway, and in the story somebody goes bankrupt, and he asks to his friend, "How did you get bankrupt?" And I think it was in Monaco 64 it was mentioned, because I watched too many videos during the day. And the other guy says, "Hey, Bill, how did you get bankrupt?" And the Bill says, "Well, it started slowly in the beginning and then ended up suddenly, I collapsed." So this is how it goes. It goes slow. Nobody expects anything big. They say, okay, it's going to be $50, $80, 100. But when the collapse comes, it's a big drop, or it may go up to 5,000, 4,000. We don't know. But if you're just heading for 3,000, as I said, you're wasting your time. If you're buying physical gold, you should aim, because there is this difference as well between buying and selling price. There is a premium, so it's a waste of money if you're just buying gold to make profit. Okay, in the, let's say, 1 year term, if 3,000 is your main goal, so you should look for 3,500, 4,000, 5,000. Then you're talking. Okay, last year gold increased about 40% annual. I can, if it works, I can check, because gold sites are all locked. Where I can get the exact increase number in US dollars. Yes, in 1 year, gold increased as of today 40.13% in US dollars. Okay, 40%. Now I'm talking. 40% is good, but 4% is not good. So shall we sell our gold now and put it in the guaranteed US government bonds? We have similar in Turkey. We pay 7%, which is much better than even US government bonds, paying 7%. Every 6 months coupon paid. And the price you buy today comes to, because it's a very recent, last week we went for a Eurobond sales, which is in US dollars. The number was above 7%. So better 2%, 2.5% better than US. So in a way, because most of my viewers are from Turkey, that's a deal as well. So at the end of the year, if the gold is $2,800 or barely $3,000, don't talk about how much money you make, because if that's your goal, fine. If it makes 40% on top of the existing price, now that's a story. Okay, now $2,861 times 1.40, that brings it to $4,005. Is it possible? Well, looking back, we have seen 3 years consecutive gold making such highs. But we must point this out. It's not the gold that's increasing. It's the US dollar losing value. As you know, in 1971, they were attached to each other when Nixon declared that it's no longer based in gold. US dollar is no longer based on gold. So since then, the $35 ounce became $2,861. So it's not gold increasing, it's dollar losing value. So if Trump's tariff increases the inflation, which won't, according to me, because Austrian group of economists don't believe price increases in one item, even oil, will not increase in the long-term inflation. For long-term inflation to increase, there is only one item: governments printing, expanding a lot of monetary base, expanding credits. That's the only way inflation can go up. Otherwise, if imagine you're always making $2,000, and one item's price goes from $20 to $50, and you're still making $2,000, so you just have to cut on other items uh, to buy the same item. So if all items are going up, you cannot. So you start cutting on your expenses. Therefore, price increases on individual items cannot affect, but it's not how it's shown to the people. People think the inflation is the rise in the prices. It's not. It's the result of expanding money supply. Okay, so it's the end result. It's not the reason. Reason is governments cannot collect enough taxes, which is now the expectation in the United States, because Donald Trump says, I'm not going to charge taxes, I'm going to decrease taxes. So you can even bring them down to zero. So how are you going to do the government expenses, huge expenses? You'll print money. Okay, so basically you'll print money. And when you print money, what happens? Inflation. So people are now taking caution against the inflation, not the people. We know that the biggest importers or repatriators of the gold are institutions in the USA, not common people, because I'm watching Peter Schiff's as well. He says there is no increase, on the opposite, consumers in the US, well, he uses term dumb, but they are not educated. I would use that term. They are not educated. And when government is buying gold and people are selling gold, they're thinking, oh, this is good value for my gold. Well, that's the trap. That's a trap. Okay. So uh, now thinking, okay, it's already made 40%. What if it falls, this year? As I said, in the long term, there is no falling for gold. Long term, no falling for gold against US dollar, because one has an inflation factor, which is printing a lot of paper money, dealing out a lot of loans. The other can only grow by 2% at most if they can find enough gold in the ground. Okay. And that's about uh, such a small increase, because that's the speed they can discover new gold mines and produce gold. Okay. So basically, there is no inflation on the side of gold, let's say exploration and recovery. So basically, this is the situation. The amount of gold moved is about, well, I have to talk not Turkish trucks, but American trucks, because this is an English video. Big trucks, they carry 20 tons, 30 tons. So it's about, if you calculate in Turkish trucks, it was about 50, 60 trucks. Now it's increased, let's say 20, 30 big caterpillars. No, Peterbilt. Peterbilt is the famous big truck in the US. So basically, this is the situation why the LMBA is moving. So I wanted to make this video on two items, as you know. One, what is 3,000? Is it a target? Shall I wait for it? Well, if not, it's not for the gains. What do I wait here? If it's physical, there is a very important aspect of gold, which is security, because when you cannot draw your money in gold for 2 months, maybe you want to keep some at home, huh? And maybe it's a security. And what if they keep printing? You want to protect yourself from your own government printing money. So you cannot give your gold to your government, because you are making the fox the guard for the chicken hen. Okay, so chicken coop. So which is wrong, basically. So that's why I know it has difficulties keeping physical gold in safes, whatever, at home safes, outsourced safes, out country safes. But people are not dumb. These are non-trusting people, which is not caused by people, it's caused by the government because they keep expanding much more than they keep expanding and expanding spending much faster than they can collect taxes from people. And people are fed up with these taxes. They are changing countries. Even rich people are leaving London and other rich countries, moving to countries where they'll be taxed less, at least for the coming 20, 30 years, until those countries start taxing them a lot. Basically, big money is smart money. Smart money runs away faster than small money. Uh, Anyhow, the second purpose was why the US was repatriating gold. It's not clearly identified, but it said it's coming from many different sources for the tariff, but it may be. I'm hearing different views that they are going to inspect the amount of gold in the USA, which was always reported at 8,000 and something tons, and they are missing. So that's why they are repatriating the gold for the government. Government wants to put it in its safes during the uh, inspection. Okay, so that's one idea. Because Trump said it's going to inspect the government gold. So this may create a move to, but they'll just rent it for the inspection. It's still not their gold, you know. So it's a funny idea, but like I say, I keep 10 kilograms of gold, but I don't have it. So what do I say? I ask a friend, can you rent me 10 kilos of gold? You know, so I'll just show during inspection and return it back to you. Uh, how trustable is this person? You know. Anyway, I hope this is a shorter video, which is not short. It's 17, 18 minutes, just to think of the situation coming next week. CPI, PPI normally are the affecting if the US is in a deep recession going towards stagflation or it's going through inflation, and we'll see. There are bets on both sides, but real situation, those are the numbers that the market is playing, gambling on it. Based on this, stock market, we are hearing may collapse to 40, 50%. On the other hand, we are hearing other people saying, no, it's going to increase another 10, 20%. No problem. No, 10% per year is the average increase for the S&P. So how would you position yourself if you're a small investor? It's not easy, but it should be done. You make a bag of different investments. Okay, there should be gold in it. The amount of gold goes down from 5%, 0% to 20, 30%, depending on your age. But if you are investing in the stocks like 70% of Americans are, uh, if you're getting close to your retirement age or not working age, let's say early retirement, you should not stay too much in the stocks, because if they collapse, sometimes it may take, like Japan, 30 years to come back to same price. So you should not just look for the biggest, best returns. You should look for biggest securities. Uh, it will not be easy for young people to accept the loss as well. If it goes down 30, 40%, even for 2 years, they would have to take, I don't know, keeping calm medication they must find. But they have more time. Yes, they have more time, but they are not that patient. New generation Z and X, in fact, the boomers are more they are more patient than the new generation. So we'll see. So if you make a good basket of investments spread into gold, in houses, real estate, uh, real estate is not just houses, then other investment like bonds, stocks, you should have a balanced portfolio, especially as I said, if you're getting older, and especially if you are young but you are not patient, similar. So a boomer and the Z group of people, they should invest similarly in that sense. I hope you enjoyed the video. See you in the next video, probably in a month's time. I don't make too many English videos. These are for mainly English practice purposes. See you again. Bye bye.